Hey, welcome everybody to the 40 Finance channel. Taking a lunch break here on Friday in what has turned out to be a pretty red day in the market, and continues on the theme that we've seen this week, where we have earnings reports that, frankly aren't half bad, but stocks are just getting crushed, particularly small cap stocks. Anything that doesn't have a profit line is getting absolutely destroyed. And so the question is, how much further do we possibly have to go in this market? And what should you do now if you want to take advantage of some of the things that are going on? I mean, do you save up all your money and just follow the energy trade and hope that oil goes to $300 a barrel and get rich that way? Or do you look for deals in the market and hope that things turn around? But no matter what you decide, I would say that the thing that's working in all of our favors right now is time. So at least for myself as a long-term investor, you can't think about, in this environment, making money for tomorrow. It has to be quality, and it has to be for the long term. And that, pick your spots. And the thing that I'm doing now and have been doing throughout February and January is buying very small lots. There's no room for going all in on anything in this environment, in my opinion. So, more than likely, your favorite companies or companies that you've been watching for a long time have pulled back some. I mean, I think everything has pulled back. And so you have to ask yourself, is this the good time to get in? And you don't have to commit all of your money. What if you bought 5 shares? What if you liked Facebook for a long time? Alibaba, any of the big ones, Amazon, that you see down, these companies are not going to go out of business. They're not going to go bankrupt. Do you add 5 shares? Do you add 1 share? What can you do right now besides sit on your hands to try to make some money for the long term? And at least where I sit, I think there's opportunity here. I don't necessarily know that today is the bottom, or maybe it's in March when the interest rates come out. But one thing I will say, you don't have this much volatility and sit on your hands and wait for things to magically turn around. I think there is opportunity. Some of us will pick correctly, some of us will pick incorrectly. But if you have time on your side with long-term investing, you're probably going to come out ahead in this environment, is what I would say. So taking a look at, let me switch over, see some of the damage here. This is just a replica portfolio of QQQ holdings here today. And we're starting to see a little bit from Apple, who really has not fallen that far. And if you look at fundamentals, which we'll do in a second, Apple's still trading ahead of its typical fundamental, particularly for a company that is in single-digit growth stages in its lifespan here. So 167 down about 0.96%. You have AMD, who their earnings report came out and basically said nothing but good things. They're going to continue on with their acquisitions, Xilinx, and everything looks really good for AMD in the future, particularly when you say 3 years in the future, right? 2 years, end of this year even should be a good year. And yet now you've got the stock is inching its way back to $100 suddenly. I mean, it's less than 10% away from being right on that line of $100. NVIDIA just came out with a great earnings report. I've said for a while, hey Marco, how you doing? Thanks for typing in. I always worry about the chat work until I see somebody type in. NVIDIA Nothing wrong with their earnings report. We knew, or I knew anyway, that NVIDIA was going to be this sort of like final straw of a company that, at least historically, was running hotter than it ever has. So it came down. You know, I don't know what NVIDIA would have had to do to really go up in this environment. They probably would have had to have, 200% sales or something like that, but they had a good report. There's nothing in their immediate trajectory that says concerns. I've heard some people talk about maybe with NVIDIA that their cryptocurrency chips are not in as much demand, so look out because the bottom could be falling. I don't really see that. I think that is an argument that's a little tired for NVIDIA. I mean, that was an argument we were getting in 2019, way before COVID times. So, if you've been looking at NVIDIA, can I tell you that 234 is rock bottom for it? Not necessarily. I ran some just basic calculations today, and there's easily still room for this one to go to 200 on paper, but after a 4% drop down on positive earnings, does it make sense to buy a share or two, not knowing where this market's going to go? That my mind leads towards that. Start to DCA in and take advantage, but don't go all in. Save some money on the sidelines. Intel, they've had their share of problems throughout this whole pandemic, but I would say that the future for Intel 3 years from now, particularly with some of the things that they're building, this is an interesting opportunity at $44, particularly with their dividend and how much cash they bring in. They're not going to grow nearly like AMD and stuff is because they simply are already at the top of the mountain. But I would never say that Intel is a loser stock. I would just say the longer term is probably how you have to play it. Moving along, we've got Microsoft finally under 300 now for a little while. And even with Microsoft, there's nothing wrong going on at that company, right? And enterprise cloud continues to show strength. So, Microsoft, I feel pretty good about buying a share here or there at 289, and maybe you get lucky and it goes down even further and you can double down on it, right? Facebook, we all know, it's been covered quite a bit. $206, I did a video yesterday, and Facebook is pre-COVID levels. Okay, so everything that they've done right, and they've done some things wrong, but everything they've done right is resulted in a stock that is now cheaper than it was in January, February of 2020. I think that's a little crazy. Tesla, Tesla, most of you know, is not one that I'm interested in necessarily, but, what's the bottom for a company like Tesla, who is, growth rates are absolutely outstanding and they have an established EPS right now. You have to think about, if you've always wanted to get into Tesla, you have to start looking at it a little bit and trying to figure out, is this the time? And maybe you break the ice and you buy a share just to say you bought it, and try to get yourself into a more positive mentality is where I'm going. Cisco, old dog stock, right? They crushed it out of nowhere, and they're talking about buying, is it Splunk or Datadog? They're buying one of those, so they're breathing new life into their world. Comcast, I don't know a ton about them. PayPal, I've talked about so much on this channel because it's one of my top holdings. $104. Yeah, I would love to tell you that's the bottom, but we've seen how things are going. For me, with PayPal, I'm doing exactly what I've said for the rest of these stocks. I'm buying one or two shares here and there, riding the ship down into the depths of hell at this point, and we'll see. This is a company that is growing. This is not a company that is regressing. This is a company that will have improved bottom line profits. They already have bottom line profits. And let's face it, guys, money is changing, right? I also own Visa. Visa's doing pretty good. But we know that 5 years from now, the transfer of money is going to be in a different world. Will PayPal be in that intersection? I do believe so, particularly with Venmo. However, regardless, you've gotten such a haircut that I think it's hard to ignore. Qualcomm and the chips, how far down are they? I'm looking at this 52-week range here. They're maybe halfway between their 52-week range. I think we all know that chips are looking pretty solid for 2022. Qualcomm could be up there. Netflix, they were on my video yesterday. It's not quite apples to apples, but they are, I think, within $5 of their pre-pandemic price. Okay, and when I say pre-pandemic, you can watch the video. It's basically January, February of 2020. Okay, so before all that, everything went on that went on, and Netflix is at $3.92. Okay, so if you fell asleep during the pandemic and you woke up and you said, which companies got billions of dollars of inflows on the revenue side, Netflix would be one of those. But here you are, you can still purchase it for the same price as 2020. T-Mobile, I'm going to skip because I just don't follow the consumer side of cell phones. But I'd have to imagine, let's see what their 52-week range is. They're right in the middle too, but I'd have to imagine T-Mobile had a good pandemic run. Pepsi doesn't move a whole ton. Amazon, we've talked about the long-term potential with Amazon. I would not surprise me to see Amazon go down a little bit more, and they're going to have hiccups in the first half of the year. I've talked about this on the channel numerous times. The second half of the year is where Amazon starts to come into its own. It's been a long run of flat. It's been disappointing for sure, but they have been investing in the company. They are working to get better. They have more customers. They have more revenue. AWS continues on. The ad business continues on. E-com's stuck in the mud right now, but they're doing things to improve that. Those things should take flight in the second half of the year. Adobe, world-class opportunity here. I'm looking at 52 weeks, and looks like 420 was your 52-week low. They're less than 10% away from that, roughly 5% away from the 52-week low. For a company that is a subscription business that has a decent chunk of their revenue on autopilot. So look at Adobe. I think there's some opportunities there. Broadcom, where are they sitting at? I don't know as much about them, but they are down 0.48% today. The chips in general, the chips sector in general is getting hit because of NVIDIA. We'll see if that continues to bounce back. Costco, we know they rode a little hot coming into their earnings. I wasn't super surprised that their price went down. However, they are breaking all the rules of retail, and they continue to win. And if you want to talk about inflation, who wins in a lot of these times with inflation is companies that are producing and selling goods because they have margin control. I assume that Costco may not have the same volume of shoppers. They may not have the same number of shopping trips, but they could very well make more money per transaction in an inflation environment. And then we got Intuit. I'm going to skip Intuit, although I will say they are heading into I'm guessing that they're running into one of their best quarters because it's tax season and TurboTax, blah, 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 blah. And then Google, $2,600. I just did a video on Google, $2,500 to $3,000, anywhere in that range. I really think it's free money. throughout. By the end of 2022, I think you're net positive on Google almost. It's got to be one of the fattest pitches in the game right now for Google. So, all right, so that's a quick look at QQQ. And, just to answer the question right off the top, where is the bottom of this one? I said coming in, and this isn't the Q, this is the NASDAQ index, but, I said 400 was the high for the Qs prior to this meltdown. 20% off of 400 is $320. I would be shocked if it got there. However, if I picked a line, I would say minus 20%, and I would say the rest shifts itself, works itself out on the promise of technology continuing to expand, supply chain problems getting better. I think inflation, maybe not next month or April. I think eventually the rate of inflation comes down. Doesn't mean there won't be inflation. We're just talking about inflation going down. And as soon as that starts happening, I think the sentiment and the morale of the market changes dramatically. However, you have to be brave enough to make your bets now for the second half of the season. Those are going to be the people who win the biggest when things do turn around. All right, so we've got Marco here. Let me get a drink real quick. And we got CBYB asking about DraftKings. So for DraftKings, let's bring that up. This is a stock that I own, and I have no plans to sell DraftKings at $18. I'm in about the $33 range. DraftKings, before the end of today, I will probably buy my 5 shares. Less than $100 seems like a good deal. And the long term with DraftKings has not changed. They've lost more on the bottom line. But as I've said time and time again, it's a top line company. And is revenues all the way. And are they growing revenues? Yes, they are. Are they growing beyond expectations? Yes, they are. They just raised their guidance. It's not a pretty story, okay? And it's not a pretty chart right now. But if you have an interest in putting a bet on DraftKings, I think 23, they just came in and said they should hit profitability in 2023. I'll try to give you that. Trying to give you that line here. May not be in here. DraftKings guidance, that's this year. Let's see if we can get anything about the profit. Not on here. Keep in mind, also with DraftKings, everything we saw in the Super Bowl was a Q1 instance, right? So I don't think they talked about the Super Bowl a whole lot, but they did. You're not going to see that until Q2. So Q1 represents arguably a better opportunity for DraftKings monetarily than Q4, because Q4 is, of course, October, November, December, holidays, Thanksgiving. You do get some of the bowl games in Q4, but Q1 has the BCS bowls, it has the Super Bowl, it has a decent chunk of March Madness baked into it. You also continue on with NBA. This year, because the Super Bowl was not until February, you also had a few of the playoff games for the NFL were rolled into January. So I think DraftKings is going to struggle with momentum over the next month, and it's an easy stock to pick on. It really is in terms of their profitability, which is zilch. In fact, they're losing more now than they were projected to. On the same token, long term at $17-18, if you've ever thought about it, I mean, I don't know. You can control 100 shares of DraftKings for options. If you get into that game, you can control 100 shares of DraftKings for roughly $1,800. Okay, that doesn't seem like a bad bet. And if you want to do, you know, a lower risk, long dated call for even cheaper, that seems like might be worth it. There's a lot of stocks like that, though, right now. And, you know, picking the ones that you have the most risk aversion to is probably the best thing. All right, Marco, between PayPal, DraftKings, he's in rough shape. Do I average down or are we going lower? So I'm going to say PayPal. You know, both of these, to be honest with you, I would say DraftKings the most risky because of their position with profitability. PayPal, I feel a lot better about for the short and long-term future. I think you got to set your own price. I really do. So maybe your price on PayPal is $99, which brings it under 100, or maybe it's 98. And that's, you set yourself a rule and you don't do anything until that time. Whatever your price is, that's the absolute no-brainer. I think that 104-ish, it was way beyond my no-brainer because I got about $150 fair value on that stock right now. So for me, it's very easy to pick off 1, 2, 3, 4, 5 shares every time we have a day like today. But I also don't want anyone, you know, if you can't afford to go down anymore, then you might just be better sitting on the sidelines and wait, you know, start getting into your charts and look for the bounce opportunity. I don't know. And along those lines, we got Damien here saying stay calm and keep buying. So I tend to agree with that, Damien, across the board. I think that what we do have here is an opportunity. I'm just going to check the news here. You have a long-term opportunity. It's sitting right in your face. Not everybody's going to agree with it. And you can expect the media to be negative. They're so negative in times like this. And I get it. You know, I get what's on the table. Interest rates, inflation, you know, now we have concerns about, you know, world wars, which, you know, I don't think that's going to happen, but it's out there and it's a concern. So this is the time when you should probably be writing out your stocks and what is your favorite price to get them at. I'm a little more comfortable in this zone now that we've chopped off so much and I see so much promise for earnings and revenue in 2022 that it's a little bit easier. This is going to sound really weird, but in some respects, the risk, in my opinion, is in oil stocks right now because it's so crowded. And I'm not saying oil won't go to 120 or 130, but I do think that it's a beaten down trade that's just asking for a shift, right? And I think the people underestimate the tactics that the United States has to bring oil prices down. Now, the good news about oil, if you're doing Exxon or something like that, is typically you get a nice dividend in there. But long term, those companies aren't growing, and they'll be the first to tell you that in their earnings report. I mean, they're minus 1% every year for infinity. Now, they might make more money this year because of the spread on the crude oil prices, so they could have a boom this year, but oil's not going to stay that price forever. It's not going to be 120 in a high inflationary environment forever. So just be cool. If you feel like you have to get into it, see if you can make some money, collect some dividends. I get it. It feels way more stable than any of the tech stocks or consumer names that I'm interested in. Just know that it's not the most unique idea out there. And if we get into lower inflation and less demand for oil, you're going to see those guys come down and everybody's going to come back, run into whatever the next category is with growth names. And it doesn't have to be tech. Growth can be consumer, it can be travel, it can be cars, right? We know what's happened with car prices. So just be careful wherever you go, and I guess that's just another name for diversification at the end of the day. All right, Krishna's here. If you have some cash sitting, would you DCA or go aggressive? DCA all the way. I don't. I let off with that, Krishna. If you're just getting here, there's no way in heckfire that I would empty my savings account today in the market. And even I would say if I woke up on Monday and the market went down another 10%. Let's just say the Qs went down another 10%, which is a big part of what I do. I would still not empty everything. I would still be DCAing because there is money to be made on the way up, right? You don't have to necessarily buy precisely at the bottom. And again, if you're long term, you have a lot of options. Even if you don't have a ton of money right now, make a comfortable investment that's not going to set you back and keep finding ways to add more to it because the upswing is just as profitable, okay? It's just as profitable on the way up. And if there's no one on this planet who's going to say Amazon, Google, I'll throw in Facebook, Apple, Microsoft, there's no way that those companies' stock is not going to go up handsomely over the next 3 years. And I think in all the cases that I just said, they're still going to go up in 2022. Now, does that mean 20%? I'd probably not. However, 5%? In year one, getting into these prices and then talking about the 20, 30% gains over 3 years or so, I think that's what you have to look at. What do you need the money for right now? Most of us who are investing for a much bigger picture, not for this year. And it's when you need money now, when you need to turn $1,000 into $5,000, that's when it gets really hard. I'm not in that position. So for me, some of this gets a little easier, right? That's my 2 cents. Mr. V, what are your thoughts on Tesla? They produced 900,000 cars in 2021. You are projecting 1.9 million for 22. So Tesla, I guess, this is not a stock I invest in outside of the fact that it's in the QQQ. What I will say about Tesla, there's still room for that one to get a bad headline. And we'll take a look at earnings projections here. All right, so December of 2022. This is what is great about Tesla. You have a $10, I wish that would go away. Make sure this is up here. $10.50 on the EPS line projected. Forward PE of 83, so you're way under a PE of 100 in the forward PE. And halfway through 2022, let's just actually say like October, right? They're going to start looking at this number, which is next year. And 65 isn't bad. I do think with just considering that you are in the automobile industry and we don't know what's going to happen with consumer necessarily yet. I mean, I think you get greedy on the price. I wouldn't necessarily buy at $8.50, but some people would. I'm going to sneeze. Sorry, I'm going to sneeze. Revenue-wise, growing strong, and Tesla always outperforms, or they certainly have lately. I'm still not attracted at $8.50 as something that I need to stop what I'm doing right now and buy it. But, DCAN, that's what we just said, on the stocks that you like. And that's the difference. I think there's so many opportunities, and Tesla is one of them. You just have to find the ones that you like. My 2 cents is right now, here today, I think Google's the safest of the safe if you want to make a couple bucks by the end of 2022. But there is a lot of long-term gainers to be had today, particularly with these prices that have just got chopped. So Tesla might be in that group. Just went through the Qs, and I think there's a lot of names in there. If you don't think Microsoft stock will eventually be over $300 in probably, the next 6 months, that's crazy, because that's exactly where they're going to go. All right. Krishna, what would be your top 5? So I just named Google. So my top 5, if I was talking to someone else, right? If I was talking to my mom or my, family member, Google is number 1 right now. And I don't see, I think that they are far and away, they have the best value proposition right now, in my opinion. Microsoft is close. I think that they always outperform. So they're up there. For me, encapsulating those names, I think the QQQ ETF, as it continues to fall down, is a very intriguing opportunity for the rest of 2022. Don't get me wrong, I think it could fall more. It wouldn't surprise me. We're seeing it every single day. But I'm in on the Qs, big time. Let's see, let me see something. If there's any others that stick out big for me, I'm going to bring up a stock screener here. So Seeking Alpha, by the way, if you're interested in Seeking Alpha, if you watch my videos, you know that down in the description there is a nice discount for a 1-year subscription of their premium offering, which is what I use here on this channel, so check that out. Let's go by market cap. Apple, Microsoft, Google. I don't mind Amazon. I'm not going to put it up there in the top ones, though, because I think it's a longer play opportunity. There's a lot of people in Berkshire. This is a Buffett type environment. I've never invested in Berkshire, so I'm not going to start today. But if you're a value type investor, this is so far in Warren Buffett's lane of opportunities to buy companies at cheap as their stock price goes down. This is his lane, and I wouldn't bet against him. Facebook. I'd love to say Facebook. I just want to see things play out a little bit. I like Visa this year. I don't think that it is necessarily cheap right now, but if the stock market continues to fall and you get down into 200 or sub 200, I think you have to jump on, because travel's coming back. They've already shown it. TSA numbers, everything is up in travel. It's not speculation anymore. Travel is back. Visa will win this year. Some of it will depend on what price you buy it at. I don't invest in any of the banks, but that's another crowded trade that a lot of people are in. Procter, it's just not my kind of trade. Procter & Gamble. MasterCard's going to be the same as Visa. Home Depot, I like Home Depot. I think you need to read what inflation does potentially to the construction environment, so I'm not too sure on them. Disney, I would feel good about right now. I think they're right back where they need to be, so I'd put them in there. So how about from the top? I'll go ahead and say Google, Microsoft, QQQ, Disney. Those are 4 that I feel pretty good about, that by the end of 2022, so call it January 1st of 2023, those stocks will be worth more than they trade at today. I feel good about those. Disney, mostly because the parks are opening and the travel tailwinds. I think it just adds up to success at the end of the day when those parks get back to full bore. So those are my picks. There's plenty of other people out there. Their list would be so much different. I would say like the You know, the people on TV, CNBC crew or whatever, they're going to come in here and they're going to probably be like Berkshire, JP Morgan, Bank of America, Procter Gamble, Exxon. That's what the street's going to say because it seems so obvious, right? Oil prices, consumer prices. I'm just looking at things a little bit differently. I'm looking at things for 3 to 5 years, if not longer. And so I'm looking for discounts on the future. Salty constitutionalist. Joe Rogan is not able to be played of spot shorted. I did not see that. I've seen the headlines for Joe Rogan. It's not a guy I typically listen to. Spotify, I'm looking for the headline that you're talking about. Now appears to be worth double that. Not sure. Short, now you're asking about shorting Spotify on Joe Rogan news in general. I don't short stocks, just to be fair. I think that the stock market goes up more than it goes down, so shorting by its nature is a little bit dangerous, but this is certainly a time where more people are doing it. There's nothing in Spotify's valuation as I look at this. 11 cents. These price to sales aren't bad if you want to go there. 2x. There's nothing on Spotify that I think constitutes $152, in my opinion. I don't know how they've set up their world, but in general, music, the libraries of music seem to generally be like a commodity now, right? I use, because I have Android and I do this stuff on YouTube, I use the Google version, which is basically YouTube Premium, which I don't care about the premium, but I don't have to see any ads. YouTube Premium and 5 music licenses for our phones, and I have kids and stuff, so that comes in handy, and that's like $20. I'm sure Apple has the exact same thing. I'm sure Amazon does as well. So there's no pricing power there. And maybe you have exclusive Joe Rogan, very similar to Sirius having exclusive Howard Stern, which is, I'm a little older, so that's a guy I grew up with. I don't know, man. It's, Sirius never really took off. I'm a Sirius subscriber, not necessarily just for Howard Stern. But if we use him as a model and we compare that to Joe Rogan, I don't know. Yeah, I think like you can't sit on one guy. You have to keep adding new people in this world of influencer / personality. Like that's a weird world to play in right now for high priced talent because you got dudes on YouTube who are playing, my kids watch, or my little boy watches people play Minecraft, right? And it's nobody. Those dudes are smoking my channel. Like millions of subscribers, it's entertaining. So I don't know, what is the price of talent these days? Netflix makes B movies with dudes and girls you've never heard of and that go on to do well, right? Squid Games, they bought from someone in a whole nother country. And there's not a person in Squid Game that I know their name. But it was phenomenal, and they're going to make more. So banking on talent is tough. It really is, and I think that's what Spotify is doing. I'm not interested. Krishna, thoughts on Adobe? I think it's good. I don't know if it's bargain basement prices, but on the same token, subscription revenue, all the things they do, there's no reason not to like Adobe, even at these levels. I think I did an Adobe analysis maybe 60 days ago. Let's take a look at this real quick. Earnings estimates. So forward P right now for the end of this fiscal year is 33.19. 10% growth. So double-digit bottom line. Top line, double digits. This price to sales, maybe that needs to go under 10. I don't know. So, you know, again, pick your spots. But this isn't wildly overvalued. I mean, if their fiscal period ends in November of 2022, that means that most analysts are going to be looking at this by November, if not October, and then you're down to a 28 all of a sudden. So yeah, and you throw in, you know, from a premium standpoint, you throw in double-digit growth on the top and bottom line, it's not an unfair price. And this is just me looking at numbers, right? This isn't even me talking about digging into an earnings report and talking about the categories that Adobe sells and how are the growth rates on those things. So yeah, I don't think it's a bad buy. Well, Chested's here. Good to see you. How close are we from an official bear market? We got to be getting close. It depends on how many days, right? So let's let Google figure it out. I think I spelled definition wrong. And Investopedia should be up here somewhere, yeah. Prolonged price declines typically describes a condition. Prices fall 20% or more from recent highs amid widespread, blah, blah, blah. Sustained period of time, typically 2 months or more. So S&P, if you wanted to get it at the high level, so there's going to be, I think some stocks are already in a bear market. And S&P, we say their high was 477. 20% off of that would be $90. Now, so they're not there yet. In fact, arguably not even close. And then you'd have to, you know, roughly be off that pace for another 2 months. We'll see what happens. I have really high hopes for, and call me an optimist here, but I have really high hopes for when the weather breaks, you know, call it May 1st, call it Memorial Day, whatever, in terms of financial opportunities for folks that are on the lower tier of income. I've said this in a different video. What you get with warmer weather where I live in Ohio in the Midwest is tons of seasonal job opportunities, tons, okay? Whether it is house renovation, landscape, bartending, waitress, concerts, events in general, there is a lot. Not to mention the consumer marketplace opens up with new categories in the warmer months. So I feel good about the warmer months, and that's why I'm not scared to buy a couple shares here and there on days like today. Oh, geez. Krishna, QQQ, VUG, or VOO? Okay. Well, I'm going to pick the Qs because I like them. But I don't have a scientific report for you. Vanguard Growth Fund is VUG. Let's see how different that is than the Qs. So it is, oh no, Apple is number one. So top 10 holdings are roughly the same. So Q has Apple, Microsoft, Amazon, Alphabet, Tesla, Facebook, Nvidia, Home Depot, I'm not sure, but they do have Visa. What is Home Depot? I don't know if they put the exchange on these. Let me see. Just seeing what exchange Home Depot is on. You know who has it? Always is Yahoo Finance. NYSE. Okay, so Home Depot is not in the Qs. Sorry that took so long. And you have 50% of the top 10 holdings representing an index. So minus Home Depot, you're very similar to the Qs. Then VOOO, which is basically the SPY, 28%. So VOO, this is like probably the biggest difference, is that it's not nearly as top heavy. So we're in a world right now where everybody's got these guys, maybe not Tesla, but most people have these guys at the top of almost every notable fund, right? The difference with VOO is that you're not quite as top heavy at 28%. So Qs, 52% top heavy. I think that the VUG was 50%, but you're going to sub out Home Depot for Broadcom and Adobe. So how about this? Instead of saying which one would I buy, I'll buy the Qs. But with the S&P 500 one, VOOO, because you're not as top heavy, your floor is limited, right? That doesn't mean that it can't go down. It just means that it's spread out more across all 500 stocks. So your risk is, in theory, less. Right? Now, obviously, if the market drops, all 500 stocks drop, and that's just the way it goes. But whereas the Qs could get picked off, say, by NVIDIA, which we actually just saw, Apple, those would be, pretty stiff blows to the Qs and the VUG. So it's about how much risk you want hanging at the top, in my opinion. As someone who invests in the Qs, I understand the risk, and I believe that those companies represent the bulk of profits and revenues going forward out of the stock market over the next 5 years, so I'm perfectly fine with that. If I wanted to be conservative, I'd buy VOOO. VOOO. I think I got that right. All right, best stocks for selling covered calls. Looks like QQQ slightly outperformed, so Chestad took a look at it. True in the sense that it's just historical. I mean, that's the hard thing with stocks, right? We can, and guys like me do it all the time on this channel. I mean, we can go back historically, we can look and try to make good decisions, but, things change, just the way that it goes. And so you have to think about where these companies can be. And I would say right now, as much as I like my DraftKings Palantir stocks as dart throws for the future, the reality is that Adobe, Microsoft, AMD type stocks are much better suited for this environment because they're producing a bottom line, and more than likely, that bottom line is going to increase over the next couple years. So as fun as it is that, let's just say Palantir, which I think is $11, maybe even in the tens by now. As fun as it is to speculate there, I would just be careful. Now, I'll buy my Palantirs at $10, but I'm not expecting anything this year. I mean, the shit's just piling on. It's either going to work out in 5 years or it's not, and honestly, it's not going to make or break me either way. I think the Palantir will be just fine. I mean, we just talked about Adobe. I think ultimately with software and services and the types of contracts that they write up, I don't see any problem about reoccurring revenue. They don't start from zero every year. So I don't know why I went down that hole. But Berlin B, if you wanted to sell covered calls in this environment, I actually, when I was talking about Palantir, that could be an option, right? My cost basis in Palantir makes it hard to do that at $21. However, I mean, I could sell long ones and get nickels and dimes out of it, but if you wanted to get something cheap for covered calls, I mean, what, $10 times 100 shares is $1,000 for Palantir. Now, if you have more money to invest, again, you have to go back to the top, right? And say, who do you think is going to outperform Google? That's expensive. $2,600 times 100 shares. Now, you could get a jump on your Google, Berlin, if you wanted to do this. You would need 5 shares, I think. Double check this math, but I think you need 5 shares of Google. And then assuming the board approves the 20-for-1 in July, you'll have your 100 shares of Google coming out of that. So that is an opportunity. It just doesn't you don't get it right now. So yeah. Let's see. Krishna, my question with Q versus VOOO was more in line. Do you think the top stocks will keep doing good for 20 and 30 years? Yes. That is a long time, to just Dad's point. I saw some, so is Apple here in 30 years? That's so freaking long in a world of tech innovation, even if you just go back to BlackBerry as a poor example of what can happen. But how about this for you that'll help you a little bit with Qs and VOO is their market cap weighted. So whatever happens to Apple, let's just say it goes to shit and Microsoft steals all their business just for fun. Market cap weighted, Apple's going to trickle out and Microsoft's going to trickle up. Tesla was not in the Qs 3 years ago, but they bought, their market cap rose, their earnings rose, they met the qualifications, and now they're sitting at what, 5 or 6? So you don't have to, with something like these ETFs, you don't have to pick the winners necessarily. They'll do the winning for you. You're more or less betting on the fact that certain sectors are going to do better, right? And I think technology is the no-brainer. Now, these tech companies are getting so big now, they are so big now, that they're drowning out the S&P 500. So 3 years ago, I think I did a video where I was like, the SPY doesn't make, I don't really like the SPY. I like the Qs a lot better. Here's why, because I think technology, blah, blah, blah. Now we're coming into the point where the SPYs and the Qs are not wildly different because, yes, my original idea was right. Technology took over the world. What I didn't think about, though, with the SPY is that its market cap weighted too. So Procter & Gamble isn't going to be number one ever, probably again, because technology will keep moving up on the market cap ladder. So that's the beauty. I mean, I don't know where Apple is in 30 years, to Chess Dad's point, but there is a game in the ETF world where it doesn't matter, really, if they do collapse on their face. And that's, so single stocks, more reward, right? You pick a winner, you buy it at the right time, significantly more reward in that than your give or take 7 to 10% out of the Qs or VOO. All right, Jordan, how you doing? Was just thinking it's been a while since I've caught one. It's good to see you, man. I hope things are going good. Brandon Middendorf, I have overly large positions and spec plays that are now weighed down, and should I cut? So good news, Brandon, I do too. We talked a little bit on this show earlier about DraftKings, Palantir, and there's probably 2 or 3 more that I'm forgetting. You'll call them $20 stocks, right? That I'm down with no Rocket Mortgage. That's another one I was thinking. They have they have very little chance of getting to par, certainly in the next 90 days. I don't see it. However, I'll just tell you what my philosophy is on those stocks right now. I am not selling, and not because I'm too proud to. It's just that I don't need the loss right now. Okay, the time to lose money if you needed to was at the end of the year for tax purposes. If you're trading on the retail side anyway. We're at the, we're on a not podcast, but we're on a show today that was talking about the bottom of the stock market. Let's say this is the bottom. Who wants to sell at the bottom? Like my timeline, if I get absolutely destroyed in DraftKings and goes to $2, right? I will probably not sell that stock until December. At the earliest, if I lost complete faith in the company, it's just not worth it. And if it went down to $2, I'm not getting anything back anyway. So what's the difference? Might as well just let it ride. And doesn't mean you have to buy more. I guarantee you I will, because I'm stupid like that sometimes. But from a sell out position, I would encourage everybody to think very, very hard about selling out here in February of 2022. No matter how bad things look, I just feel like, I'm trying to think, how about Square, right? Square makes a couple bucks in EPS. I own Square. I'm down 50% on Square. I'm fed up with Square. I don't particularly like Jack Dorsey, but I'll tell you what, I'm not selling it right now, and it could go down further. But it just like, you know what? It went from $210 to $100. They probably screw up their earnings next week, so maybe it drops another something, 25. I don't know that. But it just doesn't make sense in this environment to let it ride, because all I know is that with the stock like Square, that's sort of a fan favorite, they are a Cash App headline away from probably going up 30%. And it's not gonna shake out at the end of the year as a stock that went up 30%, right? Because they've lost a shit ton up to now. But selling at the bottom just doesn't feel good to me. My 2 cents. Chestad, or Krishna's helping out with Brandon. Brandon, we're all down. I mean, and except for the guy who went 100% oil stocks in probably July of last year. Most people are down, okay? So I missed the ARK update. Saw Kathy was buying Roblox, not something. I don't know if there's an ARK update. She's in the news a lot because she was on CNBC yesterday. And I thought it was a great interview. And I thought, I don't know about that lady. I like her composure. There's a lot of stuff she does here in the past, call it 18 months with trading in and out, that wasn't the way it used to be at ARK when I first started. Excuse me, I don't work for them. When I first bought into that stock with ARKW back in 2018, 2019, they didn't change their holdings that much. But then again, it wasn't like a volatile market like it is today. So that part ticks me off. I think that I would feel better if it was more conviction, hold long and see where it goes. But if you're interested at all of ARK, even if you hate ARK, you should watch the CNBC interview. I know they have a channel on YouTube. I don't know if they'll put the whole interview up, but it was on a halftime report. So it's in my opinion, is one of the best shows about the stock market in general. And that's the one where they get 4 people. And Scott Wapner, he just throws out names and he talks to people about their holdings and like, hey, you bought Microsoft 6 months ago. Well, where are you on it now? It's a good show. Jordan, how good does it feel to have a 3-day stock market weekend? I could use a breather. I think that's fair. I think we could use a breather and let this Russia stuff catch up. And I think the Olympics end this weekend. So, yeah, I think people need to strategize what they're going to do and pick their favorites. It's a good weekend to do that. Run your own price projections and put them on the board, right? Like, don't be nervous about certain prices going down further. Put what you would pay, fair value, your own version, and get back in the game next week. That's really why I was doing this show today, is just to have a different mindset than doom and gloom. I think that there's opportunities here, and again, I'll say what I said in the beginning of the show. Do not need to, if you have $10,000 in the bank account, please, for the love of God, do not put it all in the market today just because it's down. I think that's really dumb. I think that DCA right now is king, and I think whatever your appetite is, right? If you're nervous to the downside, buy one Facebook, PayPal, whatever your stock is that you think's on sale. Buy one freaking share, get it out of your system, come back next week, and let's say it went down, great. If you buy 2 shares, you're going to be right back into par, right? So that's my 2 cents. All right, guys, Derek Ridlin. Yeah, I'm early today. Good to see you. Riff Raff's here. What do you think about big banks? I think starting to get crowded. Banks and oil, man, I think those are the tips of everyone's tongue. Banks and oil, can't lose, can't lose. And that's when I start saying, oil has the possibility to go up, and that'll be good for those companies. I think that oil also has a significant chance of coming down in the back half of the year. So if you're going to play oil, then then be a trader and follow crude oil prices. And as soon as you see, let's assume it goes up to 100. So let's just assume it goes to 110, which would be wacky. And it goes to 110. Man, I'd have my finger on the sell button for any point that it got close to 100 even. I would be OUT out on that, because we have a lot more control in the oil fields here in America than a lot of companies do. And we'll crank those reserves up and drop them on the market whenever Biden feels like it, and the price will come down. It's just the way it goes. Derek thinks going down to 400 in SPY, averaging down, which that's what I'm doing, Derek. I'm taking advantage of the dips, and I'll eat when we get a run. Yep. So Derek, who's on the channel as a commenter quite a bit, we are in the same page, and it's everything I just got done saying for the last hour, guys. So hopefully it's I think it's good advice. There's no financial advisor. There's no super stock market celebrity person who's not me, obviously, but who's going to say DCA is a bad idea. And I say take DCA a whole nother level, man. Take it to the 1 share level, to the 5 share level if you have more money. But take it down to granular. Get the itchies out of your system, right? Buy the Q if you're me, because it just went down. Get it out of your system, and then you can walk away. And then when you wake up on Tuesday, now is the next time we're open. On Tuesday, let's say the Qs are at 335. Not a big deal. Buy one more, right? And eventually you'll be fine. And at some point, it's going to hit some level where you're like, well, this is just stupid. And you'll buy 5 on that day, and it'll just be balanced out. It makes a lot of sense to me anyhow. All right, guys, I'm going to run, go eat some lunch. I hope you guys have a great President's Day weekend. Hopefully some of you are off work on Monday. Stock market's closed. I'll still have a video or 2 over that time frame. So looking forward to it, and we'll see you on the next one.